Good morning. Good morning. Good morning. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Christmas Eve, this Tuesday, December the 24th, 2024. The market should be closing early today, if my understanding is correct. Let me see. Let me just double check. Let me see. Yes, it closes at 1 p.m. today. So, okay. Was just double checking that. So, all right. Hate this when you got to constantly refresh this Tasty Trade. You shouldn't have to constantly refresh this when you're on the app. I mean, I'm not on the app, I'm on the web-based platform, which is kind of annoying. But I like the web-based platform because it's simple enough. Okay. I decided to show my account here because I want to show you that I'm down $421 so far this year. I just started trading this, but that's okay. I'm not worried about being down because at the end of the day, I'm holding on to this for the long term anyway. So looking at the traditional one, this is the traditional IRA. Okay. I ended up having to buy 100 shares of both Riot and BTO. Let's start with Riot. So I end up owning 100 shares. My cost base is in it. In Riot is $11.72. $11 and was it 72 cents? Yes, 72 cents. The stock was down yesterday. Now it's up to $11.48, as you can see. And so I'm just a couple of cents down, 48 cents, 72, about 20 something cents down. I have the $12 call option. I'm sorry, I have a little cold today. So I apologize if you hear me sniffling. It's not going to get to the $40 strike by Friday, so I don't have to worry about that. Oh no, it's 24 days, sorry. In 24 days. I don't have to worry about it getting to $40. But it could get about $12, but then I'll just simply roll out these positions. So this is not one I'm worried about, but the BTO, this is the one I like. The reason I like the BTO is because this one pays a dividend, and I'll get into the dividend later. But right now, the stock is trading at 24.06. My cost basis in the stock is 25.86. So you can see I'm down about $1 and some change in BTO, or $100 and something dollars in BTO, and that's fine. So what I did yesterday, and I apologize that I wasn't on yesterday, but I had issues with my headset yesterday, so I couldn't get on. But um, so I own 100 shares of the BITO. Right now, it's trading below my cost basis, but that's okay. But it's up now $1.32. But what I did yesterday was I bought a put option at 22.50. So what that means that I have the right, not the obligation, but I have the right to sell my shares at 22.50. But if I sell, so if the stock was to go to zero, let's say this ETF went to zero, then I have the right to sell at 22.50. If I sell at 22.50, I'll be locking in a loss from, let me see, 25.86 minus 22.50. So the most I can lose is $330 because this is 100 shares. So this is how you limit your loss in the stock market. It's just by simply buying the insurance. So I just gotta just fear it going down really to zero. But this ETF is not going to go to zero. But if it in the event that it did, I have the right to still sell it at 22.50 and just take a $300 loss. Now, personally, I would not. Oh, excuse me, to do that. I wouldn't want to do that. And of course, if you see this trade price, I paid about 76 cents or $76 for the right to sell my stock at 22.50. However, to finance that, because I don't like paying for something without financing it, or should I say, yeah, like getting some money back is I went out a couple of more weeks and I sold a call option, which is a covered call, at 23.50. And the stock right now is at 24.04. So right now, that's why it's called ITM, in the money. And of course, I collected $1.02. Okay. So if you subtract that, that's about 28 cents or so. So I collected total, I brought down my cost basis by another 20 something cents, 20, 30 something cents. Okay. But I at least am protecting on the downside. Now, if this call keeps going higher, what I'll do is just roll out this call, but I want the dividend. So that'll bring in even more money into my account. So that's the goal of this particular trade at this moment. Okay. Now let's just look at the Roth IRA. The Roth IRA, I got two spreads in here because that's what I'm doing in the Roth IRA is trading spreads. The goal here is not to own shares. The goal here is just to bring in income on a weekly basis. So I have what is called the QQQs. Okay. And if I go here, wait a minute, that can't be correct. Let me see. QQQ. I thought so. This is a 3-day position. So why is it saying 4 day? Oh, this is 3 days. Okay. I forgot because they have daily. That's what threw me off. They have daily expirations. So I sold the 514 put, bought the 512 put. Okay. Now look how far away the stock is now. And I did it at a 10 delta, which means 10 yesterday, a 10% chance of it going in the money. Oh, I don't want no gamma and theta. I don't want none of that. I want delta. I'll leave the theta. So yesterday I did it at a 10 delta, now it's at a 6 delta. So that means that's good. That means that the stock would have to work even further to come up to threaten me. For this one expires on Friday, and that's okay. This is what I want. And let me see, what did I collect on this? I collected 23 cents or $23. Oh, excuse me. Um, I paid 78 cents for the long put, or $78 for the long put, and I collected $1.01 for the short put, or $101 for the short put. That's how you get the 23 cents. So I make $23 on this particular trade. Um, okay. Then here I have Tesla. La Test. Tesla, I did something similar. So if I click on the trade, this expires in 3 days. Look how far away this is. This also did a 10 delta, and now it's at a 3 delta. So that's good too. This the stock is going up, which is what I want. Yeah, I'm not getting much upside, but it's okay. This is to just bring in income. That's what this whole trade is about. And if I go back to my positions, I collected 28 cents or $28 on this trade, so I'm good. Or as they might say, I'm Gucci, or whatever term you want to use. So, and here noticing that in this Roth IRA account, I'm up $208 on the year, or just I'm up in this account because I haven't, because again, this is not to own shares. So when this is just about either making money or losing money, but it's not to own shares. So this is so far all the trades that I have done in this account. That's all this is saying. Okay. All right. So now what I'm going to do, okay, is switch over to my Thinkorswim account, paper money. And ooh, I did a trade with the SPX. I did two day. Yesterday I did a trade that ends today, and I did one that ends on Friday. However, it's the one that's today that's in money, that's in trouble because the index is at 60.22, and I have the 60.10, 60.30 call option. So this is bad. This is in the money. I do not want that in the money. So we're going to adjust this. I just want to see this 60.10 to 60.30. These are the two that I want to see right now. See the chart or the graph? See how it's in the money? This is not good because that means that I'm just taking max loss. So we don't want to do that. So let's go to the option chain. This is the at the money. As you can see, this line across is called at the money. and it's near max loss. So I have to adjust this out. So what I'm going to do, there's a number of ways I can do this. Okay. And you can see here on the put side, I'm going to be fine. See? And when the deltas is 0, so that's good. So I can always move this up. But what I'm going to do is move this over from Wednesday to Thursday. This 610, 630. So we're going to adjust this and move it all the way. So we're going to roll select it. So I'll just roll this out a couple of days. The market is closed tomorrow, so that's why I have to do it this way. Okay, what's going on here? Why isn't there trade popping up? The box should pop up. So what's happening? Oh, thank you. Okay. So we're gonna move this to sixty, 40, to 60, 50. Okay. Let me see. I'm gonna lose about $10. Let me hit review. Yeah, I don't want to do that. So instead of moving it to December 26th, let me move it out to December 27th. Let me see if this might make a difference. Well, this will help. Now, how much would it help? Moving it out to Friday's expiration. 1370. Okay. Let's move it out to next week. Let's move it to December 31st. Well, that definitely helps. Okay, so now instead of having $1,000 loss, I have a $700 loss. Now I'm going to make this up, and how I'm going to make it up. So I'll go ahead and do that. Move this out till next week to December 31st, which is New Year's Eve. So that went through. We wanted that. Okay. Now the puts, what I'm going to do is leave those puts alone, but I'm going to go out to December 31st here. And here's how I make up the $7. But unfortunately, I'm not going to be able to do it at no damn 10 delta, which is what I wanted. I'm trying to stay out of the red zone as much as I can. I'll just do it from the yellow zone. Go to the yellow zone. Come on. Thank you. They're going to do $10 wide. And what is the difference? It's about $1 and some change. $1.55. So if I'm $7 in the hole, shoot, I'm going to have to get it closer. I didn't want to do this, but 59.85. 59.75. $1.60. But that's a 34 delta. I don't want to be there. Oh boy. Well, I'm gonna have to increase my risk here. I mean, yeah, I didn't want to do that. So let's do it this way. Instead of doing a 10-point wide one, let's see if I can. This is where you need to have capital so you can be able to pull maneuvers like this. Let's say 15 points wide. No, I mean 25 points wide. Sorry, 25 points wide. Let's see. That premium should change. Let's see, something is wrong. Let me do it this way. This thing is acting real slow. Come on. My computer's going real slow today when I'm trying to fix this. Okay. Okay. So if I go 20 points wide, I get a premium of 370. Now let's do 3 contracts. See, it's going to take almost $5,000 in buying power, 4,900. This is why, yeah. But notice how much credit I get. But since I only collected, I mean, I had to pay 7. I don't need that much credit. So let's do it this way. This should do the trick. And I'm only now tying up $3,200 in buying power. So that's fine. So now you'll see how my new graph will look once this goes through, which it just did. This is a narrow. Okay, so this takes care of that. Now I have to see with this here. See, this is why you don't really want it to get into money, because when you got to get when it's in the money, you got to do things like this to make the trade work out. So let's see. I'm at a 29 delta on the call side. That's the problem with 1 day trades is that you risk being in the money much quicker. See, now this one here will be easier to adjust because this trade expires on Friday. See, I'm at a 4 delta. Okay. So first of all, I can afford to move up the put side, which is what I'm going to do. I'm going to move this up to about 59.15. So we're going to start there. Mm. Actually, I'd rather roll down the call side first to see how much I got to pay to move that down and then. So do something a little different, actually. Come on, computer, stop it. Thank you. 26 delta. Let's see what to move this back down to safety for Friday's expiration. 60.70. Okay. So I'm going to move the call side down. So we're going to row select it. As you can see, this is the graph. So this is green. So as green is good, but notice that it's getting near the red, which is what I want to roll it away from. That's why it's right now currently in the yellow zone. So we got to roll it down to 60.70, or roll it up, should I say, to 60.70. And then this one is 60.80. Let's see how much I end up. Okay, click review. No. See, I hate this. Just keep the same expiration. I didn't tell you to change the expiration. Gotta watch these damn expirations. Yeah. Excuse me. Okay. 205. $204 in debit. So say $205. So I got to pay 205 to roll it out. That's fine. To roll further into safety. I mean, I could just close out that side of the leg just to be on the safe side, but I don't want to do that. I'll just roll it out. Okay. Now the put side, so now I roll back to further safety. So the put side now is at a 4 delta, 58.15. So I'm going to go to a 10 delta, 59.20. Okay. Excuse me. Both selected. Okay. Put this to December 27th. This to December 27th. Then we're going to do this at 59.20. And this here at 59.10. Let's see how much I get. Change. We got to wait. No, it can't be no 45 cents. No, it can't be a debit. Oh, I see what did wrong. I see. I hate this. This is 59.20. This is 59.10. Well, I got it backwards. That's 25 cents. No, I'm gonna have to get it closer. Okay, let's say 59.60, 59.50. There we go. 80 cents limit. I want to keep it to one contract. So See what this is. 190. Okay. Let's bring this up. This is dope. It's 30 points wide of 3,000. This is fine. Okay. This will give me what I need. Keeping it to one contract. And let's see what happens. It went through. Okay. Computer's just really slow today. So now let's just do this. See? And this is fine. For now, I'll just have to, finagle around with this a little bit. But I just want to stay on the green. So I got my trade out of danger. Just buying myself some time. Okay. So much for the, I mean, quite a bit of adjustments. All right. So as you can see, this is good. The markets is closed tomorrow. Thank God. So I don't have to worry about tomorrow. Then it's Thursday and Friday. All right. If you like what you see, give me a thumbs up, subscribe, comment. If you don't like it, let me know. Anyway, I will talk to you later. Bye bye. Good morning. Good morning. Good morning. I want to welcome you to another segment of Jermaine Brown Trading Show. Today is Expiration Friday, December the 27th, 2024, the last Expiration Friday before the new year. And I hope everyone is having a healthy and prosperous holidays. Whether you celebrate Christmas, Kwanzaa, Hanukkah, regardless which you celebrate, I just hope you're doing very well this week. Okay. So today, right now, the markets is opened up on what's kind of been a bloody day today. Let's look at what the market is doing. So let's look at the SPX. So the SPX, which is the S&P 500 index, is down about $67 today so far. So that tells me it's a down day. I got some positions that's set to expire today in my Roth IRA. Well, actually, let me go into my Roth IRA. I don't want to. Now, the reason is because these are the two positions that I got to worry about today. So if I click on my trade tab, oh, wait a minute, let me click on the positions first. So look at Tesla. If I click on my trade tab, I sold the 392.50 put and I bought the 387.50 put. That's a $5 wide strike. Okay. I got three contracts. However, the stock is so far away right now. But what I don't want to do is take any chances. So I'm going to close out this because right now it's at a one delta. So let me just close this out and take this risk off the table. There's no need to try to get greedy. The whole purpose of this is not to get greedy. So I'm just closing out the legs that I originally sold. And here you'll see that I collected for Tesla 28 cents, just so you know, or $28. So I can buy it back for 2 cents or $2. So this is a nice, so I keep 26 cents of it. All right. We'll look at my other position. I'm gonna let that work for a little bit. The QQQs. Now, this here is a little closer for my liking. I sold 3 of the 514 puts, bought 3 of the 512 puts, which is $2 wide strikes. Stock is at, or the ETF is at 519. This is a 13 delta and an 8 delta, so it has a little bit more risk. So I'm going to take this off the table too. The key is not to get greedy. Take these 2 off the table. And if you can see, for the Qs, I collected 23 cents. So let's see how much the damage will it cost me? 15 cents, 17 cents. So I don't make as much here with the Qs, but the whole goal is to get the risk off the table. A profit, nobody's ever gone broke making a profit. Let's see if I can replace this. I might pay a little bit more. Or this is at this. Let's see. Okay, so a trade just went through the queues. I was able to close out. So I got filled for 15 cents. So look at it here. I collected 23 cents. I closed it out for 15 cents. So I collect 8 cents or $8 on this trade. Not a lot, but at least it was a profitable trade. I wish it was more profitable, but when the market is down, you take what you can get. Now I'm just waiting for Tesla to fail. Let's see what happens with Tesla. Oh man. But in the meantime, I'm gonna go over to my paper trading account and here and deal with this SPX, which is currently in the money. 59.64. Oh, these are in the money. This is on December 31st, which is a couple of more days away. So yeah, unfortunately, I got some work to do in this to fix this. I mean, technically, this is paper trade. I don't have to, but this is good practice. So I might as well deal with this. Let's just deal with this. See, right now here's the graph. It's in the red, which is what we don't want. So we're going to row select it. Well, before we do that, let's look at where we're at. Hold on, before we do that, I'm getting ahead of myself. Let me look at the option chain. Let me see where my deltas is at. Obviously, it's going to be in the 40s, if not 50s. 67, yeah, which is what I thought. Okay. And I have a $30 wide spread. So this is, I'm risking $3,000 here. Um, okay. So what I'm going to have to do, I don't have to, but what I'm going to do is go out like, let's say 7 days. Um, 50, 80, 50, 50. Let's go out 7 days. More, more, more. Okay. So looking at uh like a 59.20. Okay, I'm gonna see this is what happens now. This can really get all right. Uh, luckily, see this is why you gotta have ammunition. These are only one contract, so if I need to instead of 3 days out, let's go 7 days out. It's gonna be about $800. Yeah. See, well, it's $900 in debit. $900 is better than losing 3,000, which is what you don't want is taking max loss. Or this and this say, look at this, $2,700. My account is down here, so I need to fix this. There are ways that I can fix this, though. I want to move that out of danger. So that's the first thing I got to do. So, okay, Jermaine, you just moved that out of danger. However, now we got to make that up. So, 7 days. Oh my God, I'm almost still. Oh my gosh. I really didn't calculate this properly because look, already it's right near the at the money. So, okay, here's what I'm going to have to then do. I didn't want to do it this way, but it's all right. We're going to go 30 points up wide. 65, 75, 85, 95. This brings in almost $15, so this will do the trick. So this brings in that amount of credit, but now, and it doesn't touch my buying power. So this pretty much does the trick, but what it does is it makes it very close, which I don't like. Let's see now. Yeah, see, I don't like this, but I'll just deal with it for now. See, here's how close it's going to be. Just do this. So this is the 7 day. Now look, oh, narrow. I don't like this, but at least it gets me out of danger for now, and I'll just have to manipulate it, down the road later on. But it's okay. But you see, this is how you fix a trade that's in trouble without adding on more risk, or in this case, more contracts. Notice how just by now adjusting that call side, or not even really adjusting, just adding, bringing in another contract on that call side because the calls that I originally had going to expire worthless. So this is fine. Now I got to fix this trade. Now this is kind of again, this is how you get practice. This is good because this is in a virtual account. So this is good for practice. Now, in this case, both legs are in the money. So this is a problem. Well, first of all, no, I don't want all of that. Boom, boom, boom. See, this is in the red. So what we want to do is adjust this, but I just want to see which. This is the 4 day away one. See, they're both in the money, so this is not good. So what I need to do is do 59.40. This is $20 wide. Okay, 59.40. So I'm going to roll this out because this is at a 58 delta. So we got to get that out of here. Yeah, that's in the wrong thing. I'm going to do 7 day on this one as well. Get it out the way. 59.40. And this is 20 points wide. So this could be 59.20. I'm going to pay about $700, almost seven. So I got to make that up. See? Now I got that into more safety, which is fine. and you'll see. And what I will do, I shouldn't have done the same day though, because see now this can get confusing. Yeah, I shouldn't have done the same day, but I'll just leave it. But for now, let me just do, this is 20 points wide. So as I don't, 5980, 6,000. This should make up the difference. 922 credit. See, the goal is to just bring in more credit than what I had to pay out, the payback. So that's all I'm doing is just maneuvering trades around. So yeah. All right. Yeah, this is kind of a mess, but what I did is just move myself out of further danger without taking max loss. Okay, now I got to go back to Tasty Trade, my real account, which is the most important one. This is just a practice or simulated account. This is like, again, an airline pilot. You do not want a pilot flying a plane who has never practiced in a simulation flying a plane. You want him or her to practice a craft before flying, especially with real people on the line. Okay, so this thing is still not working, still working. Let's replace this. I'm gonna put three, let's put 4 cents. Let's make certain we get filled. I'll pay back 12 of it. All right, that got me out. Boom. Okay. So now if you notice, I have no positions left. So you see what says 0, 0, which is what you want. So now I'm out. I'm safe. Now the stock can do what it wants to do. Um, Let me look, and this is QQQ and this is Tesla. So obviously, I can't do another trade on these two today, or I'm risking a PDT, get hit with a PDT, which you don't want, which is a pattern day trading rule. They pattern day trade, and about three of those in a week, you got a problem. So they can lock your account. So the key is to avoid that. Let me see. Let me look at SPY, which is the spot. Let's look at trade, and we're going to look at 7 days out on this one, which is January 3rd. The SPY is down $8, which is perfect because this allows me to sell puts to bring in. Now, because the market is moving down and the ETF is moving down. This is the S&P 500 ETF, not the SPX. This is the SPY. But this is moving down about $8, a little over $8. So now this allows me to collect more premium because puts get more expensive. So I'm going to go to about a 10 delta, which is the 575. So that's about 20 points away for next week. And I'm going to do, I could go $2 wide. See, but I'm risking $188 to make $12. But look at my probability of profit at 92%. Um, hmm. So what I'm gonna do, I don't want to go more than $2 wide on this stuff. That could go $5 wide. This is 4. This is $5 wide. $28, risking 471 to make 28. I could do that, but I don't want to do that. Let me see. I like a little bit more meat on the bone. If I'm gonna take. Excuse me. You know, Jermaine, don't force anything. Unless you have a trade, don't force a trade. I could technically do this trade, but I'll think about it. Anyway, um, oh, let me look at see what my traditional account is doing. So this is what I have in my traditional account. So let's see what Ride is doing. Ride is down 62 cents today, but my covered call here, because really just look at this as a covered call. This expires, I mean, now I'm in 21 days, the $12 covered call. And that's okay. So Riot is my yeah. I just got a covered call on Riot. So I'm just gonna again wait it out. I should have had a I should have purchased a put to protect my downside. I could always do that next week. But I want to wait until an update to purchase that put. So I don't pay as much for it. What about BITO? Now BITO is interesting because again, they pay out a dividend. I believe it's scheduled next week. I own 100 shares of the stock, just like I own 100 shares of Riot. But here I have what is called a collar trade where I am protecting my downside. Now you say, Jermaine, why are you protecting your downside on this one here, but not on Riot? It's real simple. Because this one here, I mean, I'm familiar. I've traded Riot before, so I have familiarity with how they trade. However, BITO, this is the first time I'm trading BITO. And BITO, what's interesting is that they pay a monthly dividend and it has a very high yield. And dividends that have a very high yield tend to be much more riskier or volatile. So you definitely want to protect the downside And that's the reason why you want to have this protection. So I have the 2250 put. So this when this stock is going down, this put is going up in value. So it offsets the loss on the stock. So I'm not really losing. And then I got the 2350 calls. Okay. Now, give me 1 second. Sorry. Got the 2350 calls. So as long as the stock stays below 2350, I collect the whole premium on that. And so the most I can lose on this trade is, let's say BTO went out of business tomorrow, okay? Or went to zero. And this is why you do this collar trade. You want to protect your downside. The upside takes care of itself. Donald J. Trump. He said that in one of his books. Or at least he was quoted as saying that in one of his books. Now, whether he actually said it or not is another story. But he was quoted as saying that in one of his books. Protect your downside, the upside takes care of itself. So even if BTO went bankrupt or went to zero tomorrow, the most I can lose in this trade is $300 because I'm down $3 in the trade. I can't lose no more than $300 in this trade, no matter what the stock does. So this is how you minimize your risk, in the stock market. Okay, excuse me. Wow, again, if you like what you're seeing, give me a thumbs up, subscribe, comment, leave a comment, and, let me know what you're thinking. Okay, I will talk to you later. Bye bye.